Hello everyone, thanks for joining us today and welcome to this educational presentation of a strategy designed to buy low and sell high. Now I know that goes contrary to what we usually teach and try to educate our traders. We're always telling them don't try to pick bottoms or tops, but you're going to see how you can specifically do this with this particular strategy today. For example, let's look at this older chart here in CHTR. Now, someone looking at this just off site would say, well, Steve, we're in a downtrend. As you can see, we're making lower lows, and I don't want to touch this because it looks like it's going to go much, much lower. But the strategy I'm going to be sharing with you today that is designed to buy low actually generated not only one, but two buy signals right here at the very bottom prior to a 28-point jump up in the stock in just a couple of weeks. So this is a really, really great strategy in terms of consistency, and it isn't very difficult at all. The actual strategy is extremely simple, and we made it even more simple by adding it to our platform. This is the PTS Primo charting platform that teaches you how to buy low and sell high. So welcome to this pre-holiday webinar. My name is Steven Primo, President and Founder of Specialist Trading. As you most likely all know, I've been trading for roughly about 42 years now, going on 43. I started my career out on the floor of the Pacific Stock Exchange, where I was on the floor for a total of 16 years. And out of those years, I was a specialist. That's where we get the name Specialist Trading. Okay, so I wasn't any more special than anyone else, but that's the title they give you if you specialize in making markets. You see, in the old days, everything wasn't electric. You had to physically, your floor broker had to physically walk up to the trader who specialized in making the market. So if you wanted to buy 100 shares, let's say of IBM, you would in those days, the old antiquated days, call up your broker. Your broker in turn would call up the floor broker, who in turn would take the order and then walk up to the specialist. In this case, it would be me who would sell them 100 shares of IBM, or if he wanted to sell, I would have to buy it. So I made a market in those stocks, IBM, Waste Management, US Air. I did that for roughly, as I said, 9 years. I made markets during the crash of '87 and the bull market after that. So I've been in every market environment you can think of. On top of that, I've traded just about every system, every trading course, any indicator you can think of. So if something is around now and you think this is brand new, or someone is on TV or on the internet telling you about how much money they can make following this, trust me, it's been around before. They've just rebranded it. So what you want to focus on are the things that have been around before. There's nothing wrong with that, but the things that have stood the test of time, that really have a high level of consistency. And that's the only thing we teach and trade ourselves at Specialist Trading. These are the things that have stood the test of time, and this is what we try and educate you. You'll see today how this particular method is so simple and so easy, but it has a really high level of consistency with all the examples I'm going to be sharing with you. So before we begin, as always, we're first required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results. I have a lot of slides in not only stocks, but futures, currency pairs, and commodities. But please remember that we can in no way guarantee that any of the performance results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. Once again, as you're taking a brief moment to view our disclaimer, I would like to take this time to invite each and every one of you to follow us on Twitter. We post a lot of free educational pieces of information, such as signals our strategies have generated to little bits of financial educational wisdom. So lots of great free education there. Please feel free, if you haven't done so already, to follow us on Twitter. Now remember, our only goal, as I stated in the opening statement, is simply to educate you. We're an educational company. This is going to be an educational presentation today. And someone will say, well, Steve, why do you focus so much on education? Well, let's start by asking you a question. And be honest, how do you make your trading decisions, okay? Do you go to a chat room or a trading room, or do you watch the pundits on TV? Or do you have some master indicator that's supposed to tell you exactly where to buy or sell? If you do those things, let's just really break it down. What's the most common denominator? What's the most thing that's linking all those three decision-making processes? Is that you're not part of the process. You're going somewhere outside of yourself to make your decision. Whether you listen to somebody or whether you listen to some indicator, maybe it's that $10,000 class you took where they have all the answers. But it's not coming from you, and it's not coming from the source, which is the chart in front of you. Now, someone could say, well, how do you know this works? Well, trust me, when I first started trading 42 years ago, I did all of the same things that you're probably still doing right now. And I had very limited results. In fact, I didn't think I was going to be in the industry much longer because I wasn't making any money. I was just treading water. My mentors taught me the same things that I teach my students around the world. That is to focus on the chart in front of you, because that's where all the answers come from. That's what you're trading. So why not focus on that? So this is what our goal is, to simply teach you how to learn what the market is telling you as opposed to some guy in a chat room or some guy on TV, so that ultimately you can make your own decisions. In my opinion, as I always state, this is the only way someone can become a consistent trader. Not by following someone in a room, not by following some master $10,000 course, but by making your own trading decisions. And this is the core of what we teach. This is the way I was taught some 42 years ago, and what I believe has been able to sustain me now for 4 decades. So hopefully my teaching will be able to sustain you going forward as well. Now, this is going to be an educational presentation today, and because it is, I want you to ask as many questions as possible. But please remember, if we ask all the questions that you want, every slide will probably be here going into the holiday weekend. I don't want to take up that much time of yours, so please wait till the end of class to ask any questions. The only question I will answer is this being recorded? Yes, it is. So if you have to leave early, if you're having technical issues, don't worry. We will send each and every one of you a link to this recording, okay? All right, with that stated, why don't we begin today's presentation? And before we begin, I must first apologize. The reason I'm apologizing is if you've been, an attendee to most of my presentations in the past, you know I always like to give out a couple of educational tidbits, a couple of rules to the actual strategy, maybe 1 or 2 or something. With this particular method, since it is so simple, I won't really be able to give out a lot of information. I apologize for that. Because if I gave you the 2 rules, well, then you'd know the whole strategy, because the whole strategy is only based on 2 certain rules. And it's, 2 certain features and their relationship to one another. So I have to apologize for not, I usually pride myself on giving each and every one of my students something in the presentations. Even if they don't decide to become a member of our courses, at least they walked away from my webinars with some educational information. I'll still give you something and you'll see it, but it's going to be very limited today. So once again, as you see here on the screen, let me apologize firstly. All right, we're going to be talking about strategy number 9. This is an entirely new strategy. It was only introduced at the very beginning of this year. We're already 6 months into the year, and some of our students who are privy to this course are getting back to us with testimonials of really high levels of consistency. It's a proprietary pullback method. I'll go into that in detail, explain to you exactly what a pullback method is if you're not familiar with that. The beauty of strategy 9, as with a number of our courses, is you can apply it to any market, any time frame, and any direction. I'll show you examples in all of those in just a few minutes. One of the extra added advantages of this is that you can apply options to this particular course and this particular method. And the reason is because it's designed to buy low. And I say that because with options so many times, because of the high cost of them, because of, you're paying for that, and also the premium costs as well as the time decay, they will eat into a lot of your profit. So you may actually, with any other of our courses and strategies, you may actually have a winning trade if you purchase the stock or the future or the currency pair. But because you purchase options, because of the decay and the price of the option, you actually may have lost money or not made any money or not enough. The beauty of this is because we're buying at lower prices, you can buy an option, whether it's out of the money or even in the money, at a lower price, and then be able to take advantage of the nice move if it is a winning trade. But with all of our strategies, once again, please paper trade first. If you decide to become a student of mine in this course, please, it is required that you first paper trade. Our edge here is consistency, but consistency means that there will be losses from time to time. So we want you to fully understand the process before you jump in with both feet and actually apply real capital. Now, strategy number 9 employs 2 simple requirements. Now, their relationship to the price automatically generates the signals. Now, if you're not familiar with what a pullback is, in an overall uptrend, buy signals will be generated during a decline. And in an overall downtrend, sell signals will be generated during a rally. So this is why we say it's advantageous if you're an option trader because you're going to be having to pay less if you want to sell because price has rallied and prices will be less. Or if you want to buy, you're buying during a decline and the prices of the option may at times be less because of the sell-off, okay? Now, the one thing I will share with you today, as you see here, is the rule for deciding if we're in an overall uptrend or a downtrend. This is besides the other two rules, but this is just telling us whether we're a buyer or a seller. So we're going to use our buy-sell line. I'll show you that in just a few minutes. But let's describe what a pullback buy is if you're not familiar with a pullback, okay? In this generic chart here, you see usually in an uptrend, you have a nice move to the upside, but then you have this kind of bracket here where you decline and then go back up. Now, if you are a breakout trader, what you usually do is you wait for price to break out of this little bracket here, and that's where you hopefully want to continue the trend and make some money. That's completely different from pullback buys. A pullback buyer will buy on this decline and try to get a lower price prior to that nice move with the resumption of the trend, okay? So this is advantageous if you like to buy at lower prices, if you want to buy options, and it's entirely the same thing if you're looking for a pullback sell. We're just going to reverse it. In this generic chart, we're looking for a sustained downward move, as you see with the red down arrow, and then we go into the bracket phase where we kind of have this up and down movement here. If you're a continuation trader, you wait for a breakout and then that's the resumption of trend. But a pullback sell trader would wait for the price to move up and then based on the requirements, Matt, because we're just not going to sell when we feel it's balanced. We have to have some requirements of structure in place. And the structure of strategy number 9 would tell you, hopefully at this level, that this is the time to sell and you can have this much more room to move to the downside and have a profit, hopefully. So that's just the generic example of how pullbacks work and how you can trade pullbacks. So let's share with you some recent strategy number 9 examples. And once again, I'm going to tell you whether you should be in an overall uptrend or a downtrend. That's with our standard buy-sell line, which is incorporated in just about 99.9% of all of our methods. But the two rules that make up the strategy, I'm sorry, I just can't give up because once again, with some reverse engineering, it would be too simple to figure out how to put it together. All right, so let's look at this chart here in TSCO, all right? Once again, someone looking at this normally would say, well, wait a minute, we're in a sell-off here. We've got, lower lows and we've got, look at the number of closes that were down on the day. So this is a downtrend. I don't want to touch this because this is going too low here and, the institutions are selling and so I think I'm going to step aside. Well, this is, once again, the way 99.9% of all traders trade. And you see how all my decisions were based, once again, not on what the chart is telling me, but what if someone else is telling me. Now, what is the chart telling me? Well, the first thing we want to know is the overall trend up or down? And the way we do that is by applying our buy-sell line. Now, on our platform, as you can see here, all these examples are from our platform. All you have to do is simply click on the buy-sell line, and the buy-sell line is a 50-period moving average. That's all it is, but it is extremely powerful because it tells us, as the title says, whether we should be buying or selling. Now, once we apply that, we ask ourselves, where is price in relation to the 50 period or the buy-sell line? Price is above. So what's that telling us? It says the overall trend is up. I don't care if we've been selling off. The overall trend is still up as long as price is above the buy-sell line. So rather than look at this as a downtrend, this is an opportunity to buy at lower prices. Now, once we add the structure of the two rules of strategy number 9, well, we see that a buy signal is generated right here when you think that price is going much, much lower. And this was in June 17th to be exact, and the stock went up 7 points coming into the beginning of July, okay? Let's look at another example in MO, all right? Once again, someone looking at this would say, well, Steve, this is a really good setup here. I mean, we're really making higher highs, and that chat room I go to loves this stock. The guy just says the earnings are going to come out. They're going to be great. It's already starting to move up in anticipation. I looked at the volume. The volume is fantastic. So you have to buy this thing, right? Once again, all of my decision-making was based off of an outside source. What is the market telling me? That's the first thing we listen to. We don't listen to someone in a chat room. We don't listen to earnings. We don't listen to, what some guy is saying, what the institutions are doing. We don't care about those things. I did all of that for you already 42 years ago, and it didn't work. So I've taken all that hard work out of the way for you. There's no reason to rely on that. Just rely on the market. So first thing we have to decide is, what is the market telling me the overall trend is? Click on our buy-sell line, and as we can see, since price is going up, this is actually a selling opportunity because the overall trend is down. Price is simply rallying in an overall downtrend. This is the definition of a pullback. So now that we use the other two remaining rules, we see here that we've actually got a confluence of sell signals. Some are better than the other. As you can see here, this is what we say by consistency. Some would work better than others. But even if you had taken all three, let's say you had gone short the stock, or maybe you even purchased some puts, and you used our, extreme stop placements, well, you still would have had a nice run to the downside, as you can see here. All right, another example in JEC. This was in the middle of June, just last month. Once again, looks like we're going lower. We had the 50-period moving average, and the 50-period moving average tells us, no, we're going lower in an overall uptrend. And you apply, as you can see here, you know the rules, but you can apply just to check your work. You click on strategy number 9 in our green strategy tab to see if you are in line. And yes, a green arrow appears. This is a valid buy setup. You could purchase if you want. Remember, this is not a strategy. These are simple. This is not a system. These are simply strategies. A system requires that you actually have to take every trade in order to have the numbers that you want in the statistics. A strategy gives you the freedom of where you want to enter, where you want to exit, and where you want to place your stop. So you are in control. Once again, going back to what I stated in the beginning, you make your own decisions. We simply provide you with these numerous different levels, and it's up to you to decide which one you want to take. And as you can see, you had a nice trade there, 7 points coming into the first week of July. How about IBM? All right. Now, let's say you were a student of candlesticks. Now, I trade candlesticks, but let's say you were a student of traditional style candlesticks. You say, well, Steve, you got to buy this. I don't care what your stuff says. I've always been taught this is a very, very good sign here. You have a bullish engulfing pattern. Look at all the days. Just the majority of them are closing up. You always say look for bars that close in the top 25%. So I'm bullish on IBM here. This was in May coming into June. Well, let's listen to the market. What is the overall trend? The overall trend is down. Why? Because we're below the 50. So sure, we may be rising, but we're rising in an overall downtrend. This is the definition of a pullback setup. So we want to sell. And once we click on strategy number 9 up here, we see that we have 2 sell setups right at the very top. So this is really something you look for, selling at the top, right? Which we said, this strategy is designed to buy low and sell high. Had you gone short IBM, I'm sure you wouldn't have shorted the stock. It's expensive, but you could have purchased puts. Well, let's see here. 10 points coming into the end of May, beginning of June. Not a bad quick trade, right? How about ZTS? Well, looking back in hindsight, at the beginning of March all the way to the beginning of July here, someone's saying, well, yeah, Steve, sure, we know in hindsight that we should have purchased this, but how would I have known that back here? Or maybe even right here, because it looks like we were topping out and then we firmed up here. Same thing, we looked like we were going much lower than we firmed up. Well, remember, rule number 1 is with all of our methods, with all of our trading, is to apply the buy-sell line, because that will tell you whether you should be a buyer or a seller. In other words, you don't just want to continue to buy and sell, buy and sell. You only want to be on one side of the fence. That fence is the overall trend. So we click on our buy-sell line up here, and guess what? The buy-sell line was telling you well in advance in March that you should only be a buyer, so you should never even consider selling this, even when you had these sell-offs. Now, we had a number of these sell-offs, as you can see, here, here, and here. These were all just pullbacks. These were advantageous places to buy. And if you knew the rules to the strategy, you would have seen that you had buy setups each and every time you had a little pullback there. So taking the first setup there in March, you could have had a total of 22 points if you held off and continued to hold on to the position all the way into July. Remember, you are in charge of your trading. Some of our traders would have said, well, you know, Steve, I'll wait till we get back to the old highs. I'll exit. I'll take this. When we get to the old highs, I'll exit. I'll take this. And we get back to the old high, I'll exit. That's fine. There's nothing wrong with that. Someone else could say, well, no, Steve, I'm going to use your method that keeps me in as long as possible. That's fine. You could use that. And someone would say, well, wait a minute, aren't you supposed to have a defined exit level? Yes, but you're supposed to be the one that chooses that, not me. You see, that's a system that has the rules set up, and you must apply them the same way. We, once again, do not teach nor trade systems. All we do is give you the information and then let you work with us to decide what's best for you based on your temperament, your risk parameters, and how you feel you want to trade. Some of our traders like to stay in as long as possible. Other traders like to have 10 trades a week, all right? There's nothing wrong with that. The one thing is wrong is when you trade based off what someone or something else is telling you how to trade. We never tell anyone how to trade. We simply teach you all the things that have high levels of consistency. All right, how about ACER, ACER? Looking at this was in April coming into June, I believe here, May and June, end of April coming into May and June. Someone looking at this would say, well, Steve, that class I took, which is all about the institutions, said the institutions are buying right here. So why would I think of anything other than buying this, right? This is major support. The institutions control everything, right? First of all, what's the first thing I tell you you're supposed to listen to? You're supposed to listen to the institutions? No, I listened to the institutions 4 decades ago. They didn't help me. In fact, I had a working relationship with the institutions. I used to talk to them on the phone all the time when I was on the floor. They would give me orders. And guess what? Half the time they were wrong. So there's no reason to follow the institutions. Once, as I always say, if they didn't work 4 decades ago, they're not about to work now. The track record was very suspicious. So there's no reason to base your trades off what they're doing. Why not base it off the market? So where someone here would say, well, there's major support, all the big institutions are buying here, what I would say is, what is the market telling me? And once I apply the buy-sell line, the market's telling me the overall trend is down. Until I get about 3 or 5 closes above that 50-period moving average, the overall trend is still down. I don't care what the institutions are doing. So if the overall trend is down, I'm going to be a seller. I apply the 2 rules of strategy number 9, and guess what? Right at the top here, I have a sell signal. So go ahead and base your decisions off of someone or something else. I'm going to sell here in ACER, and don't you think that would have been a nice trade? And if you miss that 16 points at the very top here, well, the market, not me, because I'm not telling you what to buy or sell, but the market gave you 3 more chances to get in before this quick drop. All right, so what happened to the institutions then? See, the institutions are always putting in orders and taking out orders. So once they cancel their buy for 5 million shares, there's no support there anymore. But do you know that? No. So don't worry about whatever they're doing. Just listen to the market. It tells you just about everything you need to know. How about CVX? Well, here's an example. Students always tell me, well, Steve, what happens when the trend changes? I mean, sure, every once in a while there may be some news or an event comes out and something is working great up until something like this happens, okay? So how do we trade that? Most of the time you're going to be on the wrong side, right? Well, listen, we're not guaranteeing you, once again, that every trade is going to be a winner. I said that at the very beginning. It's all about consistency. There will be losses. But there's a high level of consistency just by using the buy-sell line. Because once you add that, we know that we're only going to be a buyer if we're above. And look at the buy setups that strategy number 9 generated. Taking this first one, you could have potentially captured 10 points. Now, once price closed below here and had consistent closes, well, then you're only a seller. And look at, you could have got 2 sells right here generating another 7 points. So potentially you could have captured up to 17 points even with that strong downward move. Let's look at TSS. All right, this is May coming into June of last month. Once again, someone looking at this would say, well, Steve, this is a range market. I never want to trade range markets because usually we get up to the top of that range and that's where it goes down and then you buy at the bottom. You know, you're just going to kind of go in a whipsaw fashion. And most of the time, someone would say, well, that's a range market. That's what we want to stay out of. Now, a candlestick trader will say, well, this really isn't a range market. This is a downward trend because we have a bearish engulfing pattern right here. And look at how the market is following suit. It's a textbook reversal pattern. And so you should be looking to sell this market, okay? Once again, not a high level of consistency in either of these 2 techniques. First thing you always ask yourself is, where is price in relation to the buy-sell line or the 50-period moving average? And once you apply that, that gives you all the answers because the market is in an overall uptrend. Forget about candlesticks, forget about institutions, forget about a range market. the market is saying that overall I want to go higher until I change my mind. So our job is simply to be a buyer. That's it. But we have to add structure. It's not enough just to buy at the market. We have to add some structure in the form of strategy number 9, which actually generated 2 buy signals at the bottom there. So where the candlestick trader was saying we're in a downtrend, and where the range trader was saying don't get involved in this, you're just going to get whipsawed, the trader who only listens to the market, which is what we teach, was giving you some high probability buy setups. Had you taken these, well, potentially you could have captured the 28 points going to the upside. Now, did we have any idea the stock was going to gap up a week or two later? Absolutely not. We only know what the market is telling us, that it wants to go higher. It never tells you how high it's going to go, and it never tells you how low it's going to go. It just tells you which direction it wants to go. That's why it's silly to have some fixed exit that you always use based off of some Fibonacci number or whatever. Just decide for yourself where you'd like to get out. Decide for yourself how long you want to stay in the trade. And we give you all that education in our courses. All right, GTLS, all right. Here we are in another uptrend, all right. We have a nice sustained uptrend. Most traders will say this is the kind of market you want to buy. It keeps making higher highs almost every day. And on top of that, we are below the 50 period. So what is that telling us? We're in a pullback mode to go short. This is not something we want to buy. This is an opportunity to sell. So we apply the 2 rules that we teach you in our course, and you have 2 sell signals right at the top there. Had you gone short, potentially you could have captured 11 points coming into the end of June last month. As we look at SHOP here, once again, in hindsight, someone says, well, gosh, you know, this, I would have loved to have bought options in this. This is an expensive stock, but how would I know it was going to go up? After all, in this sideways period, it looked like it was kind of rolling over with this resistance here. Okay, once again, we don't look or worry about support and resistance. We only listen to what the market's telling us. How do we do that? We apply the 50, and even though you may have said, well, there's amazing resistance right here, the overall trend is up. So we don't care about resistance. We don't care about that. And we're looking for buy setups. We apply the rules to strategy number 9, and we would have had 3 buys here from the beginning of April all the way coming into July. So you could have had calls the entire time, or you could have purchased calls, gotten out after the first one, and then the second series you could have bought more. It's entirely up to you. That's why we say this is an excellent strategy to apply with options. Let's look at BIIB. This is an older chart in March coming into April. Once again, doesn't look like we're getting much information, but we have a nice bullish engulfing pattern right here, so that's a good sign. Most likely we're going higher, right? 2 sell signals were generated, strategy number 9, because we were below the 50-period moving average. We don't care if there's a bullish engulfing pattern. We don't care if the institutions are buying here. We don't care if some master indicator you have is telling you that we are tremendously oversold. What is the market telling us? It's telling us most likely it wants to go lower. Had you purchased the puts, well, 115 points in about a week, that would have been a nice trade, right? Okay. This is how simple trading can be when you only listen to the market. There's no reason to overcomplicate your trading. Now, I know that all of you don't just trade daily time frames, daily bars. Let's look at some different time frames. Let's say you're a swing trader. Well, here's a chart in WEC. Okay, this is a weekly chart. In January, very beginning of the year, remember that big sell-off we had in December and January? Well, here's the sell-off right here, where most people would have thought, well, gosh, the market is tanking. We got to get out of this. This was setting up 2 buy signals on a weekly time frame. Had you taken advantage of that at the beginning of the year, 17 points coming into July, okay? Not a bad setup there. Here's a monthly chart in Apple, okay? The same exact concepts apply. Nothing changes because we're looking at a monthly chart. All right, we're above the 50-period moving average, the buy-sell line, and look at all these buys here at the lows. Some more here, and look at the ones here coming into 2019. All right, had you taken the first ones and just held on, that's 170 points in the last 3 or 4 years, or more than that, more about 5 years. Let's look at a weekly chart of KHC, all right? Looks like a major bottom has been formed here. We really made a major bottom. Probably the volume picked up to the upside. We have nothing but up closing days. Everything looks great until we find out that the overall trend is still down, okay? So KHC on a weekly time frame is really just having a bounce in an overall downtrend. So that's a great opportunity to go short. Once you know the rules to strategy number 9, you apply them and see that you have 2 sell signals right here at the top. Okay? You could have purchased puts or actually shorted the stock if you want, but on a weekly time frame, 31 points, okay, in the next 6 months or so on a weekly time frame. Let's look at another weekly chart in Netflix. Okay, boy, you sure wish you would have known the rules to strategy number 9, because if you've taken advantage of that, first of all, you don't need to know the rules to know that you should have been buying this in some strategy. It didn't have to be one of mine because price was above the 50. But if you wanted to use the simplest, you would have applied strategy number 9. A buy signal generated in July 2017. You could have potentially captured up to 270 points. And then another buy signal generated as well in December 2017. Now let's look at a smaller time frame. I know not everyone trades longer time frames, so let's look at a 30-minute time frame of MSFT, okay, Microsoft. Now this was just a couple of weeks ago, June 17th. We are above the 50-period moving average. Nothing changes because we're looking at intraday. And we have a slight sell-off here, but a buy signal was generated. And we had a nice little profit, okay? Remember, you're intraday trading, so you can get out as quickly as possible or you can hold off. If you decided to buy more, well, you could have purchased 3 more times if you wanted to, because the very next 2 days we had more signals generated. And if you held on, potentially could have captured 5 points, okay? Remember, we're intraday trading, but that's a nice trade just for intraday trading for Microsoft. Now let's look at some other markets, because you can apply strategy 9 to almost any market, any time frame, and any direction. Let's look at a 1-hour chart of the E-mini futures. All right, now same rules apply. We are above the 50-period moving average and we're experiencing a sell-off, but the sell-off price is still above. This was June 27th, just last week or so. All right, so this is setting up for a buying potential, but we apply the rules, and now that we click on strategy number 9, we see the upwards green arrow, so that's telling us we have a valid signal. You're just checking your work, even though you know the rules. You could have purchased the E-mini futures on the 27th and potentially captured 45 points, almost $2,300 per unit coming into the end of June. This was last week, okay? Now, once again, this was prior to any news that came out about, the trade deal. This was prior to anything coming out, with institutions. And someone would say, well, how did you know to buy this? Because the market told us. We don't look at that. You can look at that if you want to, but there's no reason, in my opinion. Why overcomplicate your trading? The market told us in advance to go long on the 27th on an hourly time frame. Now, how about the 4-hour chart of the Australian dollar? Okay, now this was in May coming into June. As we can see here, we have a nice bounce, but that bounce is below the buy-sell line. So this is setting up for not only one, but another sell signal. Now, depending on where your stop was, you still would have been in these setups and been able to capture potentially 125 pips coming into June. All right, that's over $1,200 per unit that potentially you could have captured. Now, some of our students may have said, Steve, I'm going to take a quick 20 pip gain. I'm going to get out. That's fine. Others may have said, Steve, I'm going to go for as long as possible. That's fine too. You are in charge and should be in charge. Our philosophy is no 2 traders should ever trade alike. So if you subscribe to a signal service that tells you where to buy, where to sell, where to exit, just know that you have hundreds of traders doing the exact same thing. And that's silly. No 2 traders should ever trade alike. You should be in charge of where you buy, where you sell, and where you place your stop. We just give you the different ways in which to do that. Now, if you're a commodity trader, some people say, well, Steve, I like to trade commodities. If the market ever goes into a downtrend, into a sustained downward move, I want to go into something more tangible. Well, look at this example, a weekly chart last year in coffee, okay? A very nice run up in coffee. Most people would say, boy, that you can't, go against that strong uptrend in coffee. Well, maybe you could, because it's below the 50-period moving average. And strategy number 9 generated a sell signal right here at the top. So rather than try and buy somewhere right here when you think that it's going up, why not just take advantage of this and reap all the benefits to a nearly 18-point move to the downside? That's the way pullback trading is. You look to sell high and potentially to capture at lower prices. Okay, so let's review. Once again, strategy number 9 is a brand new strategy, meaning that it's only roughly about 6 months old. I back tested it myself and researched it for almost a year, but we've only had it for our public in roughly about 6 months. As you just saw, it's designed to trade pullbacks. The pullback meaning is buying lower and selling higher, simply using two simple indicators, two simple features, how they're based in their relationship with one another. You can apply it to any market, any time frame, any direction, as you just saw. And because of this, I think it's great for option trading, just my own personal opinion. Not saying that you have to trade options with it. You can do anything you want. But I personally, if I did trade options, which I don't, we have a number of option traders who've told us that it is really great for trading because it allows you to buy at these lower prices, which will give you lower costs and premiums, as well as give you a higher potential for a profit if the trade works out. So this is something you may want to explore. But remember, we always ask our students to paper trade to find out how they want to trade this first. Why? Because there will be losses from time to time. And even if there isn't a loss, if you don't fully understand how to apply the rules, you most likely will lose money. So we want you to paper trade so that you fully understand the process first. Now, you owe it to yourself to complete 2019 in the wrong direction. In the right direction. Most likely you've started out in the wrong direction. Excuse me, I said that in advance. You've started out in the wrong direction. That's why you're here today. Because 2019 isn't going the way you thought it would be. Okay, that's okay. I did the same thing for almost 2 years when I first started out. That's okay. The way my mentors got me going in the right direction with the things they taught me on the floor is the way I'd like to get you going in the right direction. 2019 can turn out to still be a great year for you, but you've got to make the decision to jump on board. So if you decide to do that, we have a great offer for all the attendees today. We're going to offer you our super new strategy special. This is strategy number 9, but we're not going to just stop there. We're going to include 1 year of our platform. Okay? This is what makes trading really simple. Because without our platform, you still have to figure out and know how to use the two rules in conjunction with each other, and you still know how to apply them properly. But with our platform, you can actually check your work. You can see for yourself if a signal has been generated, and then you can click on strategy number 9, the signal arrows, to see if you're in line with the actual rules. This is the beauty of our platform. It actually teaches you how to identify. You're going to get all of our different entries, all of our different exits, and all of our different stop placements. There are roughly over nearly, I would say, 24 different ways to enter, exit, and place your stop. So you're getting the entire course rules. Now, this includes strategy add-ons if you want to apply them to your current platform. But once again, we're offering you a full year of our platform. That's over $1,700 value for free. This includes our scanner, including as well continuing educational correspondence. But let me share with you what's included in our platform, okay? Because remember, this scans for pullback strategy number 9 signals. This is the beauty of this platform. You don't have to look through thousands of charts every night to find what the best setups are in your opinion. You can actually do this entire process in a matter of minutes. So on our platform, let me share with you how the scanner works. You would simply click on the strategy number tab in that upper green strategy number tab on the chart I share with you, and you'll see a window that says all the different options you can have. Just click on scanner, and then you'll see this window appear. You just simply click on scan, and you'll see a series of green and red bars. The green bars mean there's a buy signal in the corresponding stock. The red ones mean there's a sell signal. It's that simple. Now, let's say we had given you this presentation a month ago, and you decided to become a course member. You took all the online courses, you structured your paper trading around them, and you fully understand the process, and now you're scanning for setups, okay? Well, you would have seen that on June 12th, it looked as if a setup was appearing in NOC. Looks like you have a major sell-off happening here. In fact, there's a bearish engulfing pattern. Most students would say, well, wow, this is the beginning of a really strong downward move, as you can see. But if you had scanned using our scanner, you would have noticed we're above the 50, and an actual buy signal was generated on the 12th of June, just a couple of weeks ago. Had you taken advantage of that, potentially you could have captured 20 points in 1 week. Look at the beauty of this pullback setup right here. This is textbook. Now let's say, all right, you had a nice trade. You want to take another one? Okay, well, guess what? GWR was headed lower. You have a nice buy-sell line ratio because price is above, so you're going to be taking advantage of this. You scanned, and on the, I believe it was on the 17th, a sell signal was generated. Buy signal. So in this sell-off, you have a nice buy signal generated on the 17th. Had you taken advantage of that, either with options or with stocks, potentially captured 13 points. So with those two setups, we're talking about over 30 points you could have captured potentially just based off these. Now, obviously, GWR, some announcement came out. I still have no idea why it gapped up like this. Remember, you don't need to know these things. You could have taken advantage of it and said, wow, gap up like that, I most likely would have sold my position on that gap up. It's up to you. You could have taken a smaller profit, but the real basis is that you are in charge, not us. Trust me, 2019 is half over. A year from today, you will have wished you became a member of the Strategy number 9 course. Why don't you do yourself a favor and get back on board? Start off the second half of 2019 really with some consistency behind you. Here's how to take advantage of this. This is our super new strategy number special. Let's break it down. Normally, for all of this that we're including today would cost you over $4,700, but we're not going to offer you that. We're going to slash that price roughly by 35%. We're only going to charge you $29.95. You're going to save $17.40 on this discount, and payment plans are available. So even if $29.95 is too much, don't worry. You can still contact Proprietary Strategies. I designed the strategy and the platform with them. And you can still put down a small deposit and still be up and running with the strategy as early as today. This is a great offer. This is a great 4th of July discount. Here's how to take advantage of this. Remember, Proprietary Strategies is my sister site. They handle all of our course descriptions and all of our course discounts. You can contact them at proprietarystrategies.com. Email them at trading@proprietarystrategies.com. I would personally suggest contacting them by calling them at 310-598-6677. They would be more than happy to work with you and establish some type of payment plan. So you don't have to come up with $29.95 for a small deposit. You can still be up and running, okay? Now that link you see at the very bottom is the link that will take you to the sign-up page and more course information. It's not a live link, but a live link has been posted in the chat box. So just go to the chat box and you'll be able to click that on directly. Now, I said I would reserve the last 10 or 15 minutes for questions. So if you have any questions, just go to the question and answer box, type them in, and I will be happy to answer them. First question we have here is, what if I want to use my own platform, and what platforms do you have availability for? Okay, well, if you want to use your own platform, that's fine. We will also, in this deal, give you the add-ons for that add-ons mean that you will be able to see the up and down green arrows, red arrows, and you will also see when a buy or sell signal has been generated. You will get those for TradeStation, Metastock, NinjaTrader, MT4, Sierra charts, and also you will be able to apply it for Thinkorswim as well. But there's a few different alterations with the Thinkorswim model, but contact Proprietary Strategies. They'd be able to explain that more. But just all of the major platforms you can apply it to, okay? Someone is asking, can you use it for intraday trading of futures? Sure, I shared with you a hourly chart, but if you're thinking about more intraday like tick charts or 5-minute, I personally use it in small time frames, which are roughly tick charts, like maybe 1,000 tick chart of the E-mini futures. So yes, and you can use it for currency pairs. Someone is asking if you can use it for currency pairs. I only showed one example, but yes, we have a lot of students that use it for currency pairs. There are some really nice pullbacks in currency pairs as well. So yes, remember, a pullback is a specific type of trade where you're looking to buy low and sell high. So regardless of what market, regardless of what time frame, if you're the type of trader that likes to buy at lower prices, or you're the type of trader that likes to sell at higher prices, well then this is the perfect strategy for you, because that's what it's designed for, okay? Okay, if no more questions, remember, if you are really interested in taking your trading to the next level, take advantage of this great offer. Remember, the discounted July 4th price is $29.95, but you don't have to come up with that. You can still come up with a small deposit and still be up and running as early as today. One last thing I didn't mention, included with this great discount, is any student of mine gets my personal email. You will be able to email me any question you have. So it's not just like we give you the online course and say, good luck with the platform. You have personalized tech support as well as my personalized email address, and you can contact me even during the weekend. You can email me questions, and I'll be happy to answer them as quickly as possible. So this is also included. You have direct correspondence with yours truly, okay? This is a great offer. Start out July 4th, giving yourself a great holiday present, coming on board as a student of mine with the Strategy Number 9 course, okay? As we conclude, we want to take one last look at our disclaimer, and I just want to say thank you so much for taking time out of your day to attend this webinar. I'd also like to wish each and every one of you a happy and safe July 4th, and thank you so much for supporting us at Proprietary Strategies and Specialist Trading, and we look forward to all of you becoming students of mine in the Strategy Number 9 course. Thank you so much. Have a great holiday weekend. I'll see you next time. Bye-bye.